Hello and welcome to the January 30th edition of the Gold, Goats, and Guns Market Report. My name's Tom Luongo, and we've got a lot to talk about. And before we get started this morning, I want to clear up a little business about Sunday's market report, where I equated the 9/11 truthers to the flat earthers. That was unfair. A couple of people have corrected me on this behind the scenes. I've had to have a number of discussions about this. What I meant, and I really should have used the moon landing guys, right? The guys who still believe that the moon landing wasn't real, is that when you start down the rabbit hole of a particular conspiracy theory or fact or whatever, it is very easy to get lost in it. It's very easy to get lost, just like the left is now lost in their conspiracy theory that Donald Trump is a puppet of Vladimir Putin. Okay. It's not to say that there isn't, certainly with the 9/11 story, that aren't holes with the narrative, because there are tremendous holes with the narrative. But I tend to believe, and I don't have a strong opinion one way or the other about the events of the day of 9/11, for the most part, except for Building 7, which I do believe was pulled for to cover up certain financial crimes. But that's my personal opinion. It's not. And I'm not set in stone on that, right? I don't think I have facts on this or anything. I think there's just too many. I think there's just, that's one coincidence too far for me. But that what's important about 9/11 is that they're covering up their incompetence as much as they're covering up anything else. And that they either opportunistically or cleverly, depending on your point of view, erected the most vile surveillance state in the history of man. And that's the real takeaway. That's what you need to be focused on, not whether or not jet fuel burns at 1,500 degrees and steel melts at 2,500. That's not what's important. And I'm dead serious about that. Okay. What's important is it doesn't matter whether the buildings failed because they were designed to fail that way, or because the buildings were pulled, is irrelevant. The net result is exactly the same. And that's what we have to deal with. Our job is to remain in the present and trying to figure out what the present tells us about the future. And it's always good to keep an open mind about everything, about all of this stuff, because we'll never know the real truth about any of it, ever. Because there's too many people with too many vested interests to ever let the truth will out. And that's the saddest part about all of it. And that's the main lesson for why they shouldn't have the power that they have, which is the default position of gold, goats, and guns. All right, let's get on. Speaking of people who have more power than they absolutely should ever have been given. Latest report just broke over Sputnik News like an hour ago. There's a military coup attempt against the government in Colombia as well. So if Colombia's government is not willing to play ball with John Bolton to help us overthrow Maduro in Venezuela, well, then Colombia will have to be regime changed as well. That's where we are. John Bolton is incompetent and dangerous and needs to be removed from power, but he's not going to be, because it's become completely obvious to me, especially with Trump's latest tweet this morning about the intelligence agencies are naive about Iran and yada, yada, yada. Trump has a script in his head. That script was created over 20 years ago, and he's running it. I'm sitting down to work on this month's issue. I've been meaning to start it a couple of days ago, and my schedule has just not meshed up properly with my being able to start it. So I'm going to have to write it very quickly over the course of this week and this weekend, which is probably best for the best anyway, since events are so fluid right now. But I can tell you the title of it. There is no plan B. And the more I think about this, the more we need to prepare for what America's going to look like post-Trump. Because what he's doing right now and what he's allowing Bolton, Pompeo, and Pence and the rest of them to do right now, and I think he's complicit in this at this point. He has to be on the hook for it. You can't make excuses for him anymore. What he's doing right now will discredit the deplorables, the non-Marxists, for a generation. And maybe that's the plan, to get him from office. That's how they're going to get him out of office. They're going to run this thing far worse than it ever should have been, to prove that, oh, look, even Hillary wouldn't have done this. That's coming. You can take that one to the bank. That's what's coming next. On the other side of the news is Theresa May, and I called it perfectly right. Theresa May called all the Remainers bluffs, and yesterday was a non-event. Parliament's voted down 4 of the 6 amendments to the Article 50 Act, or the Withdrawal Agreement Act. I'm not even sure what act all these amendments are for, but it doesn't matter. They were going to have the binding. They're supposedly going to have the binding of law. Only one of them matters. The second one was virtue signaling, saying you go back to Brussels saying our preferred stance is that we don't have a no deal Brexit, but that doesn't mean anything. It doesn't carry any weight. The other one is the Brady Amendment, which would do away with the Irish backstop, which is a clear signal to Brussels as to what Parliament can agree on. That's the only thing Parliament can agree on, because the rest of them are just playing politics. They all have a different version of a soft Brexit that they want. 2 things actually we learned. One, no permanent customs union, because Jeremy Corbyn tabled that amendment and it was voted down pretty substantially. So no permanent customs union, no Irish backstop. Those are much clearer goals. Those are much clearer negotiating points that May can go back to Brussels with, and I don't think Brussels is going to move one bit. And if they do, if Brussels moves, and this will have to be the subject of my next article on this, but I'll tell you guys this now that I'm thinking about it, because it's just coming into my head now. If Brussels moves towards the Brits on this, it will be a sign that they are incredibly worried about a sovereign debt crisis erupting, that they are incredibly worried about the financial markets realizing that they don't have frankly, a pot to piss in or a window to throw it out of. In this, and they have no cards to play, and they're going to lose all of their major battles going forward. And that's, I think, why I saw the desperation move this morning of MEPs trying to wrest control of the Nord Stream 2 pipeline from Germany. And Germany had to issue a legal opinion about this morning. That's obviously a Soros move behind the scenes to take his to get his MEPs to try and stop the Nord Stream 2 pipeline. It's either Soros or it's Trump's guys, and either way, it doesn't matter. It's the U.S. It's somebody outside of Russia and Germany trying to stop Nord Stream 2. And the truth of the matter is that Germany's energy needs are so high that Nord Stream 2 is not an issue. Nord Stream 3 is the issue. Because Nord Stream 3 will happen in the next decade. You can bank on that as well. So those 2 things are tied together explicitly. So understand that's what's going on there. The mood, from what I understand, at Davos was like a morgue. I've heard this from a number of different people, including people who were there behind the scenes. And that means that they're worried, and that all of these moves that they're making are moves of desperation. So all these are good moves. I think all of this is good in the long run. In the short run, it's terrible. In the short run, it's empowering people like Ocasio-Cortez and the Elizabeth Warren wing of the Democratic Party. Trump's militarism is going to move the center of this country towards those people over time, because they're going to continue to make the very salient argument, because it's a hard argument to counter at this point, and it's something that Tucker Carlson needs to get his ass on really quickly, and he's stepping. He won't touch this, which is to say that every time that Trump adds more deficit, every time he spends more money on the military, every time he does all of these things, and healthcare costs are out of control, and the banks keep getting bailed out, and they're making the argument. They're making the less argument for them that we need universal health care and a massive tax on assets, not income. They're making that argument now. That's the big talking point. We tax assets and we tax income and not assets. Why do we do that? Well, that's stupid. We should be taxing the rich. We should be soaking the rich. Well, if they attack assets, and you guys, and I know many of you, listening to me know that that's terrible, because most people who are really rich or, above the, have more than some number of assets, pay $5 million a year or whatever it is, that they don't have a lot of cash. They're asset rich and cash poor. Most people are asset rich and cash poor, even the middle class. They're asset rich. They have a house. Most of their assets are tied into their house. They're not, and they're tied into stocks. I mean, their 401k or their IRA. They don't have a lot of cash. And so but this is a very easy argument for them to make. Everybody is asset rich and cash poor who have assets at all. So mobilizing the 50% of this country that don't have either assets or cash to vote for all this stuff is pretty obvious at this point. It's stupid. It's self-destructive, but it's what we need to start preparing ourselves for. So, to be honest with you, there you go. There's the situation. And then we have, and in response to all of this, gold is following through. And on that note, let's go to the charts. So here we are. Gold, this bullish engulfing bar here is proving to be incredibly powerful. And why shouldn't it be? We closed last week at 1302. They tried to hold it in place on Monday. It failed. Now we're trading at 1312, and the short covering is happening. I widened this chart out to show you while I was putting this out. I was putting this together last night, actually. And so this bar is actually, it's 1312. It should be up here, that's at 1310. So the bar is even more impressive looking. But what's important is that we're above this 1308 level here. So here was a potential cluster of resistance back here from the middle of the middle of May of last year. We've now retraced most of last year's drop. This is also very important. So this rally is going to end at some point, and it's most likely going to end right at the post-Brexit high, and we're going to have yet another failure of the post-Brexit high, unless Brexit happens on WTO terms, unless the Italians pull some shenanigans, unless something else happens, unless the Gilets jaunes in, I think I'm saying that right, the Yellow Vests in France overthrow Macron. I don't speak French at all. So I'm sure my accent is not getting any better, even though one of my gaming buddies is French. He's very French. And he's also, by the way, a millennial and awesome. He's a millennial. He's gay. I'm going to tell you this one. He's French. And he's a libertarian. If he's a woman, I'd have married him. He's fantastic. He's like 30, and he really gets it. We were discussing politics the other night, much to the consternation of a couple of the libs in the group, and it was really awesome, actually. I kept getting nasty looks from the other table. He and I were very, very amicably chatting back and forth about what the problem is in France, and watching. And they can't say anything to him because he's French, and it's very obvious that they have opinions about Brexit and they have opinions about the Yellow Vest that are contra to what we're talking about, but they can't say anything because I get a French guy right there telling us exactly what's going on. So it's great. Y'all would have loved it if you saw the dynamic that was happening. I was not unhip to it at the time. So, yeah. And the best part about it, we just got done playing a game called Manhattan Project Energy Empire, which is a big worker placement game based on the post World War II energy building the economies up post the Manhattan Project, post World War II, is what it could have looked like had we all played differently. So I was playing like Japan, and other people were playing like India and whatnot. So it's very, very cool. Very, very interesting game. Like it a lot. Not any good at it. Like it a lot. But it was just really funny to watch all that happen. But gold looks really strong here. But understand that there's a wall at 1360, 1365 that's coming. And I would actually like to see gold. I really wanted to see gold kind of correct back to 1250 first, and then start to put the move on above 1300. But we're here now. and it looks strong. But I would be not shocked to see it push back to 1365 and to see silver push back above 16, maybe even 1650. Well, it's going to probably move to 1650 at a minimum. The big question is whether or not I can get over $18. Silver's got a much bigger row to hoe. All right. So gold looks good here. And these probabilities were were set on Sunday. We opened really close to the close from last week. And look, we had our 4-to-1 pot odds, 5-to-1 pot odds. No, 5-to-2. Yeah, almost 5-to-1 pot odds that we were going to break higher, and we got it. And we're not going to go back the other way. Certainly not with this bullish engulfing bar from last week. So, and there's room now after a 3-week consolidation for another 2 or 3 weeks worth of moving higher. So, looks good. All right. One of our subscribers asked me the other day about the Euro Canadian dollar cross, because he's a Canadian working in Europe. So he's paid in Canadian dollars, but he lives and has to pay all of his bills, in his day-to-day life in euros. And so he asked me for how to deal with the hedging. How does he deal with some kind of hedging strategy in order to deal with his inherently poor position? Because it is a poor position, because the Canadian dollar is weaker than the euro, and it's going to continue to be weaker than the euro, I think, because I don't really think we're going to see energy prices back above. I don't think energy prices can sustain themselves at these levels, and if they do, then it's not good for anybody. The world really does want $50 a barrel oil, and the Canadians are in serious trouble because they can't even get their oil to market, and so Western Canadian Select is trading at a steep discount to even WTI, which is itself trading at a steep discount to Brent, because the demand for oil is in China and in Southeast Asia and in Europe and the rest of them. So that's the bigger issue, and the North American oil can't get out of its own way because the pipeline infrastructure and the export terminal infrastructure is lacking relative to the production. So it's a big supply and demand mismatch, which is not going to go away anytime soon. Well, in the Permian Basin, it's at least until the end of this year and into 2020. And in Canada, we don't even know what the numbers look like. So looking at this chart, and I know that the big question is, how can the euro continue to stay at these levels for for much longer? To be honest with you, I don't think so. And I think this bar, so I put up the monthly chart here because I just wanted to get an idea of what was going on. This is a 5-year monthly chart. And if we look at January, it's pretty obvious that there and January and December, you can see that there's real volatility in this pair, and it has to do with the volatile spike in the price of oil. The Canadian dollar is so much more tied to the price of oil than, for example, the Russian ruble, which we talked about on Sunday. Right, the Russian ruble has divested itself of a lot of its dollar demand, and its exposure to the ruble dollar cross is far less interesting than it used to be. And therefore people don't trade it relative to the price of oil with the same intensity that they used to. But they still trade the Canadian dollar this way. They still trade the Aussie dollar this way. And they should, because those economies are not strong otherwise, even though people like to tell us all the time that Russia has an economy the size of Canada. Well, no, not really. Not in purchasing power parity, they don't. It's more like Germany, and that's going to continue. That gap is going to continue. The gap between Russia and Germany is closing rapidly on that basis, which is the only basis that matters, if GDP is even worth a shit at all. So, what I would say here is, I'm trying to make the point here is that if you look at this chart, it's pretty obvious that anything above $1.55, 155 on the Canadian loonie cross, the Euro loonie cross, is probably a good opportunity to go short this cross. And 140 is when you want to go long. And at this point, it's going to be more like 147. I think in the long run, if Trump's moves here and I'm talking about over the course of this year, so long run, let's talk about the next 9 to 12 months. And I don't have a future strategy for you on this. I don't have you should buy. I don't have a straddle strategy for you or anything like that. I'm not that kind of guy. I mean, and certainly when it comes to currency pairs, I wish I could give you some kind of strategy on this. I don't have one. I know that we have people who are subscribers to the service who do that kind of trading and are probably a better resource than me. And that's part of the reason why this is as much a community as anything else. So either ask on Patreon or ask in Slack. In the money forum on Slack, what you should do on this stuff, because I know there are some people who would be able to do much better than I would, and so part of my job here is to bring people of varying skill sets together and help each other out this way. So this is actually a better question to be thrown open, not only just to myself, but also to the forum at large. But just looking at the chart, it's pretty obvious that anything above $1.55, $1.57, you want to be short here, and then and anything around $1.47 you want to be Canadian dollar 7.47 you want to be long, and to help mitigate this risk. But it's not a good situation. So looking at it from over the 9 to 12 month horizon, I don't think we're going to see much higher oil prices than we have now, and I think that that once we get a breakdown in the euro, and I really think that $1.13 is what they're trying to hold on to desperately, and they're losing that battle. The problem is that the Canadian dollar is even more vulnerable in this situation than the euro is. And I think that that's part of the problem, is that it's easy for me in dollars to talk about this and think about this in dollars, but if I was a Canadian at this point, I would be wanting to hedge this by divesting myself of both of these currencies and moving into dollars. And maybe that's probably the best strategy, is not to think directly into how you can hedge this, but to look at this and say, nothing about Canada's structural position is going to improve. Certainly not with Justin Trudeau at the helm. We know that the euro is the first domino to fall, and that capital will start to rise, will start to move towards the Americans. So at this point, what I would suggest is you hedge both of these by buying both dollar, dollar index futures or gold, because gold is breaking out in both of these currencies. And so the best way to hedge your purchasing power is to convert any excess income into gold, even if it's just gold stocks or whatever. That way you'll have the ability to move into, then from there, whatever currency you want. And that's what I would suggest, because I haven't looked at the Canadian dollar price of gold, but I haven't looked at that chart, but I can tell you that it's going to look just like the euro chart. Having looked at it, it's probably more bullish than the euro chart, to be honest with you. So, yeah. And we know that the euro gold chart is good. So, in times like this is why we have gold. This is why gold trades as a currency pair against everything. So, that would be my recommendation here, because I don't like either of these currencies, so I wouldn't want to hold either of them. And I certainly wouldn't want to be paid in either of them. I want to own debt in both of these currencies. So there's that as well, right? Buying. Now I want to buy debt in these currencies. I don't want to be holding. I want to be buying debt. I don't want to be holding. I don't want to be holding bonds. I want to be the guy on the other side of the trade, and then converting that into something else. Right, run that carry trade, but I wouldn't want to get into that kind of carry trade stuff. But again, somebody else may have a really elegant solution on the Slack channel if you ask. So it's, again, another reason why I had these assets are available to you. Okay, and then the last thing to talk about, let's talk about the Dow. We talked about this the last couple of weeks, and it's pretty obvious. I put up the kind of long-term trend chart. The long-term trend line a couple of weeks ago as to where the Dow is, and it cuts right through here, like right through this low and here. If you go all the way back and really look at a big monthly chart of the Dow, it's pretty obvious where the trend line is, and that trend line has been broken, and now it's acting as resistance. And ding, ding, connect those three highs, connect that low with these two highs, and there's your resistance line, and the Dow is holding within it. But also now look at what's happening with the Dow is that we're starting to trace what? We're starting to trace a consolidation pattern. So if we don't violate this low between the end of this week and we don't violate this high, if we continue to like trade underneath this trend line, actually that would be worse. It's better at this point to consolidate here in the 24,000s, not throw a reversal, as Martin Armstrong would put it. They don't even pick off one of Armstrong's reversals. He goes, trade sideways for a while. Let the rest of the market digest all the volatility over the last 5 months, and then go, oh yeah, no, this looks pretty good. And then wait the euro out and wait events in Europe out to see what's going on, and then build a base from which then you can actually attack 26 grand. That's what I would, that's what the kind of behavior I would like to see out of the Dow at this point, because after 5 weeks, it's been a strong uptrend. It's time for some kind of consolidation, and that's what we're getting here. We could even see a move back down to around 24 grand or 23.5 or something like that. And none of that would be, 24 grand would be this support line, this support, that support low. There's a bunch of these lows in here, but then again, there's also these old ones in here in 23.5, 23.3, that kind of thing. So a bounce back down into that over the course of February would not be untoward either, before wanting to make a move back to 26,000 as the situation in Europe starts to break down. All right, that's what I've got for you this morning. Probably way more than you needed, or more of your time than it should have been. We'll be back on Sunday, meeting with a couple of subscribers who live locally here for lunch today. Really looking forward to that. They're great people. They've been with me for a long, long time. I absolutely adore them. And now that they live around the corner, I should actually have them over to the house on a regular basis. But that's different story for a different day. That's what I'm going to do this afternoon. And then I'm going to go hang out with my gaming buddies and piss them off, talking politics, because yay. And then we're going to sit down and really going to get into the nuts and bolts of what's going on with the issue for March. So you guys, or February, you guys take care. You have a great afternoon and the rest of your week. Remember to unplug on a regular basis. It's really important for your sanity. All right? You be well. Keep your stick on the ice.